Hi friends, welcome back to FinveStocks. Today we will see the second video on engulfing pattern. So we were discussing about multiple candlestick pattern. In that we already covered bullish engulfing pattern. So today we will be covering bearish engulfing pattern. In our previous videos, we discussed about what is a candlestick, what are the different types of candlesticks available, what is a single stick pattern, and what is a multiple candlestick pattern. In our last video, we discussed about bullish engulfing pattern, how it is being formed, and how to trade a bullish engulfing pattern. Today we will be discussing about bearish engulfing pattern, that is just opposite of bullish engulfing pattern. The market is going into an uptrend, so this bearish engulfing pattern will form at the top of the bullish run. So in this case, you can see at the top of bullish run, there forms a green candle which will give a continuation of the bull trend. Then suddenly next candle will open higher and it will start selling pressure and it will start falling down and it will completely engulf previous candle. When the red candle completely engulfs the green candle or completely engulf or swallow the green candle, it forms a bearish engulfing pattern. Now let's see the bearish engulfing pattern in a live chart. So in this chart, if you see, the market is going in an uptrend and it forms the P1 candle. Here this one is the P1 candle and the second candle is the P2 candle. So P1 was showing continuation of the bullish trend which forms a green or blue candle. The next candle, P2 candle, opens at a higher point and it starts selling pressure and it starts pushing the market down, and it closed at a point which is below the opening point of P1. So this forms a bearish engulfing which shows the red candle completely engulfed the blue candle or the green candle, which is the start of downtrend. After that you can see the market collapse and it forms a downtrend. So let's see how to trade in a bearish engulfing pattern. If you see, the market is on uptrend and it forms a bearish engulfing pattern on the top. So here the first candle P1, it shows the bullishness which is a continuation of the uptrend. The next candle, that is P2. P2 opens at a higher point which shows the trend continuation, and suddenly the selling pressure starts falling down and it closed at a point which is below the opening point of P1. So it forms a bearish engulfing pattern. That means the candle P2 completely engulfs P1 or the candle P2 completely swallows P1, which forms a start of downtrend. And after that you can see the downtrend start. There are two types of strategies for trading this pattern. One is for the risk takers and one is for the risk averse. For risk takers, they can initiate the trade at the closing of P2. That means once you are confirmed the engulfing happens on this candle, you can initiate the trade at P2 candle at a level on the closing side. So you can initiate a short trade over here for the continuous downtrend. For the risk averse, they can wait for next candle, that is P3. If the P3 candle shows bearish, then they can initiate a trade. So here if you see the candle, next candle, that is P3 candle, is also showing bearishness. So they can initiate a trade at the end of P3. If you compare risk averse and risk taker will have an upper hand because they captured the trend at a higher level. So for that shorters, they will get more profit out of this. So as explained earlier, the strategy of trading in a bearish engulfing pattern is to start shorting at the closing of P2. So the entry level is at the closing level of P2. Here in this chart, the green candle shows P1 and the red candle shows P2. So you can initiate the trade at the closing level of P2. So that is the entry level, and you can keep a stop loss of the highest point of P1 or P2, that is here. So this will be the stop loss, here the entry point, and target can be set for shorters at the next swing level. The first level for taking profit is the first swing level, that is here. So one can take a profit over here. The second level is the second swing level, that is here. You can continue taking profit at the second level here. So these are the two levels of target one can set in bearish engulfing pattern. If you are new to this channel, please do consider subscribing this channel. Also, don't forget to like, comment and share if you like the video. Now let's see some of the live examples for bearish engulfing pattern. For that we will go to kite and we will open the same Reliance for some engulfing pattern. So we have to search engulfing pattern, bearish engulfing pattern on the top of uptrend. So here clearly we can see one engulfing pattern over here. So the market is on uptrend and here forms a doji, and the next, that is the P1, and the next candle is a completely bearish candle and which completely engulfs the P1. So there the start of downtrend. So one can short at closing level of P2 for a good downside. If you are a risk taker, you will benefit good because you will initiate your trade at close of P2. If you are a risk averse, then you will wait for the next candle, P3 candle, to have a bearish sign. But in this case, it is a bullish candle at P3. So you will avoid the trade. So you will be avoiding a good downtrend. So always risk takers will be benefiting in engulfing pattern. So let's see some more examples. Here one more example we can see. Here the uptrend is there. Here the engulfing is happening. And then the downtrend starts. Similarly here one more engulfing pattern on the uptrend and then comes the downtrend. So you can see n number of engulfing pattern on any chart. If you take any chart, you will see a lot of engulfing pattern. Here one more engulfing pattern where in the uptrend it completely engulfs the previous P1 candle and shows the downtrend. Let's take one more example. Say we'll take HDFC Bank, or for that matter we will take HDFC. So in HDFC Bank, if you search for bearish engulfing, so you have to see some uptrend. On the uptrend only you will get a bearish engulfing pattern. So here also it's not a engulfing pattern here. So here if you see on the top of the uptrend, here the P1 candle is there and the P2 candle completely engulfs the P1, then starts the downtrend. So you can get n number of examples for engulfing pattern. Here you see one more engulfing pattern, bearish engulfing pattern on the uptrend, on the top of the uptrend. The P2 candle completely engulfs the P1 and starts the downtrend. And in upcoming videos, we will go more into detail of different type of multiple candlestick pattern. Morning star, evening star, white soldiers, all these patterns with examples we will see.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.